Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Bed Bath & Beyond stock and about the sort of an update on the potential short squeeze for that stock. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do not hold any position in Bed Bath & Beyond currently, although it is, something that I'm watching. So basically, this video should be for entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So I did a prior video talking about Bed Bath & Beyond just a little bit, comparing it to some of its peers and comparing it to in terms of the stock and the situation that's in the GameStop in sort of 2020 timeframe. And that's because I think there is a potential for a short squeeze on Bed Bath Beyond stock. There's at least some indicators. Not everything is lining up right now, but you can sort of look at the trends, and that's what I want to look at today. And so since I talked about this in the past, the stock has just dropped and dropped and dropped, which I think reflects roughly, in my opinion, the fundamentals of the company and the macro situation as well. The whole market has been not doing well overall, and so Bed Bath Beyond has gone along with it. However, a lot of the factors that I would look at for an actual short squeeze, right? That is decoupled from the fundamentals of the company just at least a bit, right? Can be decoupled from the fundamentals of the company, and so that's what I want to talk about and focus on today. So, sort of as the update from last time, we have the official shares outstanding number after the most recent buybacks, and there is just under 80 million shares outstanding. And the shares that are short is currently at 24.6 million shares. And so that is roughly 31% of the outstanding shares that are short. And so this is, high short interest, not massive, right? Not the 100% plus that we did see it on GameStop, but that is a good chunk. And I'm going to talk just in a minute about what that trend has been. But one other thing to keep in mind here is that Ryan Cohen holds about 9.5 million shares. So that's a big chunk of the shares outstanding that are, held by an insider that, I would be surprised to see those shares being sold anytime soon. And there is also about another 2 million shares that are held by insiders, directors, and executives at the company. So if you subtract those shares out and you make the reasonable assumption that those insiders are going to be holding onto those shares for years, no matter what, in order to keep control of the company or to help keep control of the company, then really we're looking at more like 36% of the shares outstanding being short, right? And that doesn't count any potential institutional holders that might be insensitive to price, right? You have some of this is held in index funds and those sorts of things, where they're probably just going to be holding those shares. But regardless, that gives you at least a picture where the short interest is high. It's not astronomical. So that's, an interesting thing. But one of the calculations I like to do is to look at, okay, of those remaining shares that are not held by insiders, what is the value of all those shares? Because if we look at the company right now, the total market cap is on the order, it's like $400 million. But with some of those shares that are held by insiders, the market cap is much lower. We can take out the calculator, right? And we have about let's do rough math. Well, we'll do reasonable math, right? So we have, looking over here, we have 79.96 million shares outstanding. Subtract off 9.45 million that are held by Ryan Cohen. And then this is going to be a rounded number, but subtract off another 2 million that are held by insiders. And that gets us to 68.51 million shares outstanding, right? And some of these, as I said, are held by institutions. I'm not counting any of those because who knows what they would actually do in sort of a squeeze type scenario. But if you look at that and then you multiply by the current share price, that is, as of Friday's close, $5.09. That gets us to about, did I do that right? Maybe I did. So that gets us about closer to $350 million of the market cap of those shares that are not held by insiders. And so that's an important number in part of the thesis, because that's how much would need to be held by the folks who are performing, who are actually driving the squeeze, right? And the thesis here is that this is going to be potentially retail driven, and that is coming from the retail interest. And this is I'm using the Bed Bath and Beyond stock subreddit as a proxy for what the retail interest is in Bed Bath & Beyond stock. And this is the most recent, this is a graph over time, and you can see this just in the past 2 or 3 weeks. There's been another spike up in increase in interest from retail, or from Reddit users. This is my best measurement of retail interest in Bed Bath & Beyond, where I can get a quantitative measure. And so there are currently about 11,000 folks who are subscribed to this subreddit. And so just the math that I am kind of doing here, if we have 348 million, let's go ahead and make this real number. So that's the actual market cap from the prior, that's the value of all the outstanding shares that are not held by insiders at the current share price. And ignoring all the extra shares that sort of are in circulation due to shorting. So if we look at that, and then if we were to divide hypothetically by those 11,073 people, in order to actually hold all those shares, that would mean the average subscriber to this subreddit would need to have invested $31,500 at the current price. Now, there's probably a good chunk of these folks who have invested at much higher prices, given that you saw the chart, it's been going down, so that's not a realistic number. However, sort of as time goes on, if this chart continues going up, meaning there's increased retail interest in the stock, and if the stock price does not drastically go up while those folks are joining, right, while people might be purchasing more shares, then it gets more and more realistic to use this number. And as this number comes down, because you have more and more people who are interested in the stock, if this number gets down into single digit thousands, that is where it can really get credible that folks have purchased and are holding a large number of the shares. And you could get into a the low liquidity scenario that would cause a short squeeze. So a couple of things to look at. One thing that I like to understand is what is the actual short thesis here. And my best interpretation of this, my best speculation here, is really the 2024 debt, the 2024 bonds that Bed Bath & Beyond has outstanding, right? They have, I could probably pull up the 10Q. Let me pull it up here. And so if we look at their balance sheet, just real quick, they don't have a whole lot of cash. They have about, $100 million of cash. They got a bunch of inventories, $1.8 billion, at least at book value. And then if we go back down here to their debt, long-term debt, $1.4 billion in debt. So compared to their cash, they've got tons of debt here. When you actually look at the breakdown of that debt, this is they have bonds that are due in 2024, 2034, and 2044. So some of those bonds don't come due for a long, long time in the future. However, there is a good chunk that is due in 2024 in the middle of the year, right? So there's about 2 years between here and there. And this is the page for those bonds right here. They are trading. It's $300 million worth of bonds that are still outstanding. Let me see if I can zoom this in a little bit for you. So there's about $300 million of the bonds still outstanding right now. And these bonds right now, like, they've fallen off a cliff in terms of price, right? As of in April, roughly the last time I looked, I think it was around about here. So they were still trading in the upper 90s. That was indicative of, people had faith that the company was going to repay these bonds in 2024. However, recently these have just dropped and dropped and dropped, right? And the most recent trade was actually $41.12. So these are trading, at 41 cents on the dollar. And so that does not really give you a whole lot of faith in this. And so I think the short thesis is pretty straightforward, that they think Bed Bath & Beyond is not going to be able to pay back these bonds in 2024, and that they're going to go into some some restructuring or some default at this point, which is going to wipe out the equity. So if so that's just the understanding of the short thesis here, and that's kind of what I think is, if I put my self in the mindset of thinking I want to short this stock, that would be it. And this is the catalyst that folks will be looking for, right? Is in 2024, in August 1st of 2024, that Bed Bath & Beyond can't repay this, right? That they are not able to turn around the business in a meaningful way. They're not able to do, reborrowings or whatever, to be able to kick this can down the road or even repay it. I mean, that would obviously be the best possible scenario, is if they were able to repay this. But if that is the case, this is the rough time frame that I'm looking at for a short thesis here to play out. So in light of that, if you're thinking about the potential for a short squeeze, and you think about, is a short squeeze going to happen before this time frame? And I think there's certainly the potential, right? If there's massively growing retail interest, right, that who knows what this is going to look like. Just for comparison, you go to the what would be a good analog here? I guess the problem is it's kind of Wall Street bets. And I don't know that this is going to be a great comparison chart, but we could take a look at it. Right, like, so 2021, this is really the massive spike we saw. So you see there was growing interest over time, and it sort of grew in 2020, and then they were just absolutely insane, right? If you see this vertical spike in people who are interested, and this was right around the GameStop short squeeze time, where folks all got involved, just became a huge phenomenon. And we're not really, we're seeing the maybe possibly a bit here, but this graph would have to go up quite a lot more. But if it goes up a lot more, from it goes from, what was it previously before this nice vertical spike of 7,000 people to 50,000 or 100,000, that gets to be a lot more feasible. Those folks could have a significant impact on on purchasing the stock and reducing liquidity, right? Purchasing the stock, holding those shares, which reduces liquidity, and now all of a sudden the amount of shares available for shorting is much smaller, and it gets harder to exit those positions. So that actually gets me into how has this looked, right? How have the shares available for shorting looked at? What has been the short borrow rate, the fee to borrow those shares to short them? And the fee, just bottom line, fee is still very, very low. It's at 2%, which is up from where it has been, right? You can see there's this trend upwards where it looks like it's spiking. And let me zoom out to see. This is showing you data from a year's worth of data right here, and you can see it was very low. It's crept up. It looks, on the graph, it looks like it's spiked, but it's still only at 2% ish. So it's not a huge borrow rate. And just for context, I think for GameStop in the middle of 2020, right? This is before the massive middle and end, right, in fall and winter of 2020, before the massive run up in the stock. It was in double-digit percent. I want to say it was at 30%, 40% for months before there was that massive spike. But that really was a precursor, was an indicator that liquidity was drying up, right? And sooner or later, when liquidity dries up, somebody can't exit their position in an orderly fashion, and things just get bid up like crazy. And that's my understanding of what really happened with the GameStop situation in January. So, and one other thing, I have kept track of what has the short interest been over time. And last time I looked, the short interest had actually been, going down. It's been on this downtrend from January is at the end or maybe the middle of January here. The first data point I have is from the end of January. Sorry, I don't know a great source for this data going back very far. So I've been manually grabbing this every time new data comes out every 2 weeks. But it was going down and down and down in terms of the number of shares that have been short. But now it's been creeping back up, right? And so we are at sort of the highest point we've been for 3 months or so, with 24.6 million shares short. And I think it will be interesting also to see how this changes, right? If this continues growing and growing as the short thesis is sort of gets stronger and stronger because, let's say, looks like the US economy is headed into recession, people aren't spending money. Those are all very valid fundamental reasons why, somebody with a short position might really increase that. But it really comes with the risk of, liquidity over time and being able to actually manage that position. So that is generally how things look right now as I see it. Now, a couple other things to note. I am watching that social media interest to see, do we see a lot more folks hopping on the bandwagon here? Do we see that starting to increase or to impact the stock price? Because as of now, this graph, more folks interested, does not correlate with anything meaningful in this graph, right? The spike that we see here, I think, was largely due to the new interim CEO and some other insiders purchasing stock with their own money. I think that gave you a bit of a jump here. I don't think that this was directly correlated to, folks hopping into the stock on the retail side. So I don't think we've started to see this actually impact the share price yet. But and then I'm also watching the liquidity, right? And the liquidity, I talked about the bar, right? What I didn't talk about was the amount of shares outstanding, or shares available to short, from this data source, which does not represent all brokers. This comes from one exchange, I think. I think there's a note at the bottom that says it comes from market data provided by the IEX. So the liquidity, or the amount of shares available to short, at least as I'm thinking about liquidity here, has actually gone down over time, right? And you can see back in last year, actually for all of last year, there's plenty of shares, millions of shares available to short. Somewhere at the beginning of this year, went down to 2 million and then quickly dropped below. So we were in below 2 million shares available. And there was a period where this really got low, and then it went back up to there's a million shares, 2 million, somewhere in that vicinity. Things do look like they've been trending downwards once again. We'll just have to see how this goes. Right? It's something I'm keeping an eye on and I do monitor, but is not. It's kind of hard to interpret this data again because it comes only from one exchange, as far as I understand it. So it's not really a full picture, but I think it's correlated with reality. That's kind of the way that I'm seeing it. So I think if this really gets low and it stays low for a while, I have to imagine that is indicative of lower liquidity for the stock, and just having that much more potential to make it hard for folks who are short the stock to be able to exit. One other huge thing, right? The other things I'm looking at are obviously what's the short interest, how does that change over time? And I think that'll be interesting to see. We should get our next readout pretty soon in terms of, because this last one was from June 15th. I think it'll be interesting to see what it was at the end of June, and that should come out maybe this week. I'm not sure. I'll have to check on that. So the other two big fundamental pieces with the company are, what are they doing with these bonds, right? This is a big part of the short thesis. And if they are able to do some sort of a restructuring, or I don't know, something where they're able to issue bonds at a later date and pay these off, or some other way to financial stuff. I'm not an expert there, but I know that there are avenues available to companies, if banks are amenable to that, to sort of extend these, or all sorts of other options to make it so that they don't actually have to pay this money back in 2024 and they can extend it a couple years. That could actually cause a lot of shorts to close out their positions because their original thesis, is incorrect. Their original thesis is not going to play out over the same time period they thought it was. And especially if some of these folks seem like they're on paper profitable. They haven't exited their position, but they're profitable because maybe they started shorting at any point, right? Any point along this decline here, they would be profitable as of now if you market the paper, other than just this short period where it's below 5. They might try to exit, right? If it looks like things are not going to play out as they originally thought, and that exiting could very quickly drive the price up if there's enough positive interest in the stock, because of increasing retail interest in the company. So that's interesting. And then the other big piece here that I haven't touched on today, because I touched on it in prior videos, is really what are they doing with BBBY Baby, right? They had this, just to recap if you're unfamiliar, there was this is a second store that is under the Bed Bath & Beyond company, but they have their own stores of BBBY Baby. And these are growing faster than the overall brand of Bed Bath & Beyond, their overall sales. And this is the initial activist stake taken by Ryan Cohen, or technically by RC Ventures, where he wrote this letter, and he basically said, look, I think BBBY Baby just on its own might be worth what the current market cap of the entire company is right now in terms of Bed Bath & Beyond. And so there's been discussion of potentially spinning that off as a separate company. And I mean, I think if that were to happen, that would be a massive benefit to shareholders, because especially one of the big questions we have with that is what are they going to do with all this debt, right? They have the debt due 2024, 2034, and 2044, all these bonds. But if those all stay with the original Bed Bath & Beyond company, and then BBBY Baby gets spun off as a separate company, separate equity, but does not have that major debt load, that could be worth a lot. It could be worth more, as he said there, more than the current market cap of Bed Bath & Beyond as it exists right now. And so that's interesting. They formed a strategic committee, the board of directors did, to sort of explore options for BBBY Baby. And we hadn't really heard anything from that, right? There was sort of a rumor a couple months ago that there might be, some people they might be shopping around the company, or that the subsidiary, to spin off. Hadn't really heard anything since then. They have this strategy committee who's been looking at the options, and they were asked in the most recent earnings call. This is a transcript right here, where this person, Jason Haas, asked, are you still considering a sale for that BBBY Baby division? And you can read the answer here real quick. I guess maybe I'll read it. This is Sue. This is the interim CEO. She said, so the business is a very attractive business, and we're not alone in appreciating its value. We know there is interest. The strategy committee has done a great deal of work to date on evaluating the potential of the business, and the business remains strong today, as we stated. So we're going to continue to build on that work to evaluate the options of the business and unlocking the future potential. It's still a work in progress, but as I said, we know there's interest. So that was her answer. That to me is a huge non-answer, and does not really, it says that they're maybe possibly considering it, but doesn't really give me a lot of faith that they're going to actually spin this off anytime soon. It sounds like they say, well, we know people are interested, but we'd like to keep it because we think we can do even better, which is not going to, maybe that's good for the company overall from a fundamental perspective. Maybe they think that's the best thing to do. If you are looking at this as a short-term trade and what could be a potential catalyst to initiate a short squeeze, right, to really get a lot of interest in the stock and cause some low liquidity environment where short squeeze might actually get kicked off, keeping it within the company and not spinning off is kind of a negative, I think, towards that. So this is something that I've been looking at, right? I'm looking for some sort of any news on this front in terms of whether they are definitely going to spin it off or definitely aren't going to spin it off and sell the BBBY Baby. So that is, I think, where things stand. Again, I think there's still a lot of the elements here in terms, just wrapping up. There's a lot of elements here where we could see this happen, but not everything is in place yet, right? And I really think a couple things, any number of these factors changing could actually sort of cause the full picture to fall in place. But I think the short interest isn't super high yet, and the the fundamental picture is sort of slowly deteriorating, and those 2024 bonds are going to be a real hard, um, a real hard hurdle for the company. And I think as long as they don't have an answer for those, and there's no other sort of wild card like a Bye Bye Baby spin-off or sale, it's going to be hard to really see what's going to get this going. But again, any one of those things that sort of moves, there's some surprise to the positive, that could get things going. And, again, the other wild card here is really retail involvement, as we've seen with a couple companies over the past couple of years, where a lot of retail traders get involved and buy up shares of the company, and that can cause some really interesting things to happen. So I continue to watch this. As I sort of disclosed up front, I do not hold any position right now, but I monitor these things closely, and I'm ready to put in to buy a position as sort of a swing trade, I guess you would call it. So, all right, that is what I wanted to go through today. Let me see, is there anything on the chat? Nothing on the chat today. So just FYI, I do these videos usually. I do these live in try to hit as many days as I can from Sunday through Thursday evenings, Eastern U.S. Evening times. Somewhere usually between 9 p.m. and midnight is my usual time frame. So if you're ever interested, feel free to try to stick around those times and hop on and chat with me live. We'll have folks live. Nobody happened to make it today, which is totally cool. So that is everything, and thank you very much for watching.